Hey guys, what's up? So welcome to another episode, and today we're going to do something very interesting. We're going to do our first IPO review, and we're going to talk about first official IPO review because I did one weekend research session with the Zomato IPO. But today we're going to do a proper IPO review of this company called PayTM. You might have heard of this with a lot of ads, the demonetization fame, but a lot of things are happening in the DRHP of PayTM, and it is very interesting to understand what are the different things that are happening with the DRHP of PayTM, because DRHP is the draft red herring prospectus which actually has all the information of PayTM IPO, the upcoming IPO. Now we want to understand कि ये IPO में होने क्या वाला है, like how much is the primary issue, how much is the OFS, which is offer for sale, and whether this is a good business, is it loss making, even if it's loss making, can it become profitable in the future. So we will look at all of that. Why? Because we are fundamental investors, we're not FOMO investors. Now, if you want to do PayTM IPO for listing gains, that's great, because then this video is useless for you, because you either way do it, get your money and get out. But this is for people who want to understand PayTM from a long-term horizon. So we're going to look into that. Got it? So let's go into it without wasting any more time. Chalo. Again, this is a part of the Meta Finance series, and as always, I will give this presentation to you guys as well. Give me like half an hour after I air this episode for me to update the link, because if I update it before, then you guys will obviously cheat and go through the entire presentation, right? So immediately after that, I'll update it. Okay, chalo. Next, what are we going to do in this episode? We're going to talk about the introduction of PayTM, business model, key highlights, financial overview, and finally our own take of what PayTM DRHP looks like. The first thing, which is introduction, what is happening with the PayTM IPO? This looks very weird, right? With me here in the small, and it seems like Vijay Shekhar Sharma is like really big and he's looking over me. Chill, boss. No problem. Fine. All okay. Okay, so basically, they're trying to do a 16,600 crore ka IPO. 16,600 crores is what they're raising. But out of that 16,600 crores, 8,300 crores is the fresh issue. Fresh issue basically means the money that will go into their bank account, right? And they will raise from all of us. Another 8,300 is basically known as offer for sale, which will not go into PayTM's bank account. It will go into the existing investors who are exiting. Now, existing investors who are exiting, there are a lot of people who are exiting as well. So we will look at that also. Now, one very important thing I want to put here, I just put out here, because this is something that I read in the DRHP. Now, I'm trying to find out some secrets from the DRHP. I'm not going to do a traditional DRHP review where I talk about the business, I look at the summary document, I do some financial review, and then I'll be like, okay, thank you guys, this is the entire video. I'm going to find out some important things which maybe a lot of people will miss out. Why? Because I've done the analysis, my team has done the analysis, and we're going to look at that. Now, basically, in the details of the pre-IPO placement, if you look at this, it basically says our company in consultation with the JGC BRLM, which is Book Runner Lead Manager, and the BRLMs may consider a further issue of equity shares. Listen to this very carefully. In the way, including by the way of a private placement to any other person aggregating to 20,000 million rupees or 2,000 crores. So what they're saying is, when they do a pre-IPO, they can raise 2,000 crores in the pre-IPO as well if someone is willing to buy in the pre-IPO. Right now, this is what is going to happen if they raise this 2,000 crore. What they're saying, if the pre-IPO placement is completed, the fresh issue will be reduced to the extent of such the pre-IPO. Basically, what it means is ये DRHP देने के बाद जब red herring prospectus आएगा, which is RHP, there's a time period between DRHP and RHP. So by the time they file the RHP, they have this small window. Now, what they're saying is they want to raise around 2,000 crores from other big people, private in placement. Basically talks about institutional investors, big guys buying in. 2,000 crores if they fill, then the actual raise in the future with the RHP will be 8,300 minus 2,000 crores, which will be 6,300 crores. That is what they're basically telling. Okay, but this was something that was hidden in the, not hidden, but this is something that is difficult to find in the DRHP. So you guys should look at it. Now, major thing that all the people try to understand when it comes to an IPO, why does a company do an IPO? Why does IPO happen? Right? IPO basically happens for like two reasons, right? One, the company is coming out first time issuing its shares from a private limited company to become a public limited company, and either it is raising money for itself to clear off something, or it is doing an exit IPO. So there are two types of IPO, which is fresh issue, which goes into the bank account and the company takes that money and start using it for a lot of purpose. Fresh issue is more important for shareholders like me. Why? Because I want my money to go as much as possible directly into the company's bank account, so that this company can start using my money and start doing really well in the future by utilizing my money, so that their result becomes better, their quarterly result becomes better. Now what happens if all of that happens, right? That means their profit will grow. A profit grows, their earnings per share or EPS will grow, right? If earnings per share grow, then according to the P ratio, the share price will go up, and the share price goes up, who's happy? Shareholder, which is me. So this is how the entire cycle. So I'm giving money to PayTM, becoming a shareholder, and the more I give money to PayTM, they should use that money smartly, wisely, and try to give return to the shareholder. At the end of the day, that is the thing. But if more money is not going into the company's bank account, like if there's an issue of 8,300 crores going into the bank account, 8,300 crores going into someone else's bank account, they're getting an exit. So the company actually has only 8,300 crores to play after the IPO, and they're raising 16,600 crores. So actually they're raising 8,300 crores, and other 8,300 crores, which is also known as offer for sale or OFS, goes into some promoters who are exiting, or maybe some funds that are exiting. So what is a company's major objective behind the funding? Some people do it for growth, some people do it for acquisition, some people do it to pay off their debt, pay off their loan. So let's see what this company is doing. So PayTM basically wants to grow and strengthen its ecosystem through acquisition and retention of customers. Basically, they're doing a lot of acquisition and retention of customers. So they want to get a lot of customers and retain them. They want to do a lot of strategic partnerships by providing greater access to technology. Now they also want to take this 8,300 crores and start investing into mergers and acquisitions. Mergers and acquisition means PayTM, after this IPO, you will see they will buy one or two companies and put them under the PayTM umbrella. That is what they will do. The third part is basically general corporate purpose, because that is basically your operational expenses, right? Just keep doing that. Now what is PayTM? Let's look at some few facts of PayTM first. Parent company's name of PayTM is known as 197 Communication. The category that it started off was e-commerce, and then it moved into online payments, and now it's gone into a lot of other things. Sector is basically IT and technology. Their tagline was PayTM Karo. You might remember that from the jingle. Their USP was basically they have online payment systems with high customer base and acceptance, because they were like the biggest front runners at one point of time. When Demon happened, PayTM launched their barcode system, which through the entire industry opened, right? And everyone started using PayTM at that point. Now, who is their segment, right? Their segmentation is basically people with smartphones looking for cashless payment transactions, right? So there are people with smartphones who can download an app, open an app. Now you'll be like, Shashank, everyone has a smartphone. Not true. There are still a lot of people using the old Nokia, which is the keypad. They don't have smartphones. So their target audience is people with smartphones, right? Their target market, right, is basically urban tier 1, tier 2 cities, young and middle-aged people. Their positioning is basically PayTM can be used as an alternative for cash to make payments for daily basic needs. That's why they have this PayTM wallet, where you can store that money and then pay your electricity bill, you can pay all your utility bill, everything, and then also transfer it to people. Now, also it had the first more advantage in India when it came out, the e-wallet industry. This was a boom long back, I think 2016 के आसपास boom हुआ था. Now 2017 में the company had earned its license from RBI to launch the first payment bank of India, right? And after demonetization, PayTM just had a huge opportunity to grow and it became very famous. Okay. Now, PayTM has spread its presence all over the country that it is even accepted as a mode of payment in a lot of tea stalls to huge supermarkets. And you would have seen this, right? People selling vada pav also have a sticker saying UPI sticker right now. Right now, UPI is not necessarily PayTM. You can pay from anything, but we'll come to how important UPI is also. Now let's look at the company timeline. This is all from their DRHP. Okay, I've not designed this, so don't think I'm so amazing with design. PayTM was launched in 2009 here. Okay, this was where it was launched. 2012 they started their own payment gateway. 2014 PayTM wallet was introduced. 2015 was when QR code, movie tickets and bill payment was introduced. 2016 my flight ticketing came in, right? So when 2015 when they came out with movie ticketing, before this there was only Book My Show. If you remember, Book My Show was the place for movie ticketing. 2015 onwards, PayTM came out with movie ticketing and they started giving attractive offers. Now, I don't know how many of you all were in this journey of 2015, but you would remember this, right? In PVR or any cinema that you wanted to go, there was PayTM discount. Then 2016 they started going against all the online aggregators for travel like ClearTrip and Make My Trip, and started flight ticketing on PayTM again with a lot of cashbacks. 2017 was a revolutionary year for them because they launched PayTM Payments Bank. Okay, that was something new concept that had come out in the fintech industry. They also introduced PayTM Gold. They said they're going to come out with FASTag, and events also started working on them. Event ticketing came up. This increased this. If you see from 2017 to 2021, just look at the difference from 9 to 16 versus 17 to 21. See the number of innovations that happened over there. From 9 to 16, one thing, two, three things, one thing. But look at this: 1, 2, 3, 4, 1, 2, 3, 1, 2, 3, 1, 2. Massive advantages and increased innovation. Crazy innovation came in. 2018 they had PayTM Games. Okay, they had postpaid. They had PayTM Money. 2019 they launched something known as Soundbox, which we'll come to later. 20 they had credit card, insurance, derivatives, FNO. Now they're trying to come up with trading as well. Equity trading has come up right now in 2021. Why? Because everyone's doing equity trading. So this is what they're in. Now if you look at the color coded, the blue ones are basically payment services, the green ones are commerce and cloud services, and the red ones are basically in the fintech financial. But if you look at this, there's so many products, right? Increased insane amount of products. But we'll come to everything. Currently they've made around 28 billion rupees from operations, but we'll come to all of the financials later. Their gross merchant value, like the total amount of money that is traded on their platform, is currently approximately around 4 trillion rupees. When you put it in rupee terms, everything looks so big. They have made around 7.4 billion transactions totally on their platform, 333 million number of total users, 114 million annual transacting users, 21 million merchants. This is important because if tomorrow someone else is coming, they have to tap into this merchant network. But also it shows the size of the audience, size of the market, because if Paytm has 21 million, that means there are more people coming up as well. 800k payment devices, all this is fine. The last one is very important: 52 billion in wealth asset under management, AUM. So wealth asset under management, 52 billion. They have around 3 million of loans that they have dispersed to. Okay, they have 52 billion in total deposits. All this is from the Paytm bank. Then they have 64 million rupees in total payment bank accounts. Again, all this is just important to understand. Now we'll see where they're going, and we'll come to all of this deep dive little later. Now the future expectation of the company by 2026 basically says that by 2026 the digital payment section will be a 40 to 50 trillion dollar industry. The retailing and retail credit outstanding will be a $1 trillion industry. MSME credit outstanding, which is basically giving loans to MSME, basically becomes like an NBFC, which is a non-banking financial operation, non-banking financial company. Sorry. So basically, they're also into lending. They'll also come in. They're also into insurance sector. They'll also come into household savings. They're already in digital payments. So basically, they're trying to expand into everywhere. But is this beneficial for them to expand everywhere or not? Is the real question, right? Now, just look at how it is structured. So basically, the founder and MD and CEO is Vijay Shekhar Sharma, and under them are all these different people. Now, I won't get into deep of who's running what. This is just for you guys to have a look at what is happening in the entire thing, right? If you look at 197, which is the main parent company, the board of directors over there are Vijay Shekhar Sharma. Then there is Ravi Adusumali, who is Elevation Capital, also known as Safe Capital. Before now, they've renamed Safe Capital or Safe Partners to Elevation Capital. Then there's Ashit from Sama Capital. They have a few guys one guy from Goldman Sachs, Berkshire Hathaway. Remember that Warren Buffett's company had actually invested in this. So Todd Combs is actually the person there. SoftBank, Munish Verma from SoftBank. So basically, this is just it. Right now, you got an introduction to what PayTM is. Chalo, pura samajh gaya. You understood everything. Now comes the interesting bit. Now comes the meaty portion of the entire video, which is the business model. Are they making money? How are they making money? And will they make money in the future? Right? So let's look at that. Now, how does Paytm make money? The payment and financial services, the red one that I showed you, contributes to approximately 66% of their current revenues. Commerce and cloud services contribute to 22%, and other income, all the rest is only 12%. So majority is still their payment and financial business. Now, how does Paytm make money? They make money through commissions. Paytm makes money from customer transactions while it's using on the platform through various commissions. There's merchant level commissions. So you can do something, they might charge something from you. Even if you don't have to pay the commission, they'll take it from the merchant that you actually end up using whoever it is, right? Then they have something known as escrow account. Escrow account basically means Paytm holds assets or money. Escrow money is held by a third party or customers and then generates revenue from them. Generates revenue matlab all the money that you keep, say for example in your Paytm wallet, or you use any kind of Paytm bank where you store the money for them, they have that money in their thing, right? You have given it to their bank account. Now, until you use it, they earn interest from it. So that is escrow accounts, number two. Number three is cross selling. Now, Paytm also makes money by partnering with other financial institutions and banks to sell their products and services. For example, loans, investments, and insurance along with its own. So basically, they're selling their own insurance, but they're also selling some other company's insurance and take a commission from those companies. Nothing wrong in that, right? But 66% of their money currently comes from the payment side of business. Now, if you look at the Paytm payment instruments that they currently have, now look at how their entire business is structured. Now, if you look at the left side, which is Paytm payment instruments, they have Paytm wallet, they have a food wallet, they have a bank account which is savings and current, they have FASTag, they have linked bank accounts, they have postpaid and EMI, debit card and credit card, wealth management, saved cards, merchant voucher. Now, if you look at the right side, which is basically for merchants, the left side was for customers. They have 333 million customers. Now, for the merchant, what is so important? For the merchant side, they have 21 million merchants and they have a payment gateway for merchants. They have an all-in-one QR code for the merchant. They have something known as Soundbox. If you look at it here, they have something known as a Soundbox on the bottom right, Soundbox 2.0. Then they have all-in-one POS system and a smart POS system. Basically, what they're trying to do is they're taking all the unorganized market, trying to make it organized and giving even your chai wala or even your vada pav wala a nice way to come on to Paytm and give him a payment gateway for digital payments, which usually now who carries cash, right? If someone says, give me 17 rupees or give me 45 rupees for two vada pavs or three vada pavs, I don't have that kind of money right now. So usually, and kaun chutta lega wapas, it's very annoying. So you just scan, show it to him and just show it. And we've all done this, right? So this is why, but imagine technology and time before this, right? A vada pav guy could never have a digital wallet. If a vada pav guy had to go set up a payment gateway, you know what he had to do? He has to go to the bank, request for a payment gateway, right? And then the bank will give you so many different forms to fill. Then they'll ask you for some credit history. Then they'll ask you the nature of your business. They'll ask you how much revenue you get on a monthly basis. And only if it's good, then they'll be like, you have to open a bank account first in our bank thing. 100 things happened, right? Earlier, abhi nahi. Abhi, it is very easy. Anyone can just start their store. You don't even have to have a physical store. You can even do cloud kitchens and etc. like this. So you don't even need a physical location. You can even do a virtual location like this, right? Now, if you look at Paytm's portfolio, this is how it is, and this is taken from Inc42 website. Inc42 is not their portfolio. This is taken from their website, but it's because I try to take from all sources possible. So Paytm Insider is basically their events platform, the ticketing platform. They have Paytm Mall, where you can go buy any kind of goods and services. Then they have Paytm Money, which is in their bill payments, which is more from the fintech side. Paytm Business Khata, right? You would have seen Khata book, very similar. Paytm Business Khata for businesses in the back end. Then they have Paytm cards, which is credit card and debit cards. And they have Paytm Payments Bank, insurance, gaming, loans, lot of things. Lot of things. But are they making money or will they become profitable? That's a real question. We'll come to that as well. Then, what did they do with their marketing strategy? If you remember, they came out with a few marketing strategies. One was the PayTM Karo. I mean, all of you remember that. But then they came out with this one game. Okay, they had this soldier mobile game that they came out with. Which did a lot of buzz in the market with respect to Paytm. Then they also had something known as a pocket dance marketing strategy where they did an ad campaign that illustrated the pain of pulling out the wallet and looking for money to make some payment. So it's obviously easy to just do it online. And then they also, obviously, if you remember at one point, they were sponsoring a cricket for a very long time. So Paytm has signed an agreement with BCCI and maintained the title sponsorship of the Indian cricket team for 5 years. Now I think Byju's has taken over that. I'm not sure exactly. Again, I wouldn't confirm on that. But they were also, I mean, Paytm was a very big sponsor of the Indian cricket team. Correct? Now, about their entire payment wallet, why it is very important to understand how their payment wallet works. This is how it basically uses, right? So this is, just look at how it works. Now, I know it might look complicated, so if it looks complicated, I'm sorry. But it is important for us to understand how Paytm works. So if you look at their payment services, okay, then you have cloud services and you have financial services. Let's look at the payment services. So they have, basically they have users, Okay, users will use Paytm payment instruments and all other payment instruments. They have merchant acquisition. Merchant acquisition basically means all the merchants that are coming on their platform. More use cases, more customers, they keep spinning that flywheel. Now, if more customers come in, what happens? You put more customers even into the commerce and cloud business for better customer experience, more lifestyle use cases. Why? Because this is more for stickiness and monetization. So you can actually use this to retain your customers. So this is on the retention side. This is on the acquisition side. And if you look at monetization, where they actually make a lot of money, is new age financial service products, which is your gold, which is your insurance, which is your now trading accounts that they're coming up with Paytm Money. So they're doing everything. So, but the main thing is acquiring customers and then keeping them in your wallet or keeping them in Paytm so that you constantly give them a lot of options to use the Paytm wallet. So once you acquire a customer, retaining them becomes the next big issue. But how does this work? Guys, now this is very important. Have you ever wondered how Paytm earns even after giving 50 to 100% cash back? Right now, this is very important. Let me show this to you. Now, Paytm wallet is basically a semi-closed wallet which is approved by RBI to store currency, not cryptocurrency. So please, all the people who are so lala and gaga about crypto, it's not that. Basically, it's physical. I mean, it's digital currency, Indian currency in digital form, which can be used to buy goods and services. Simple, that we know. Paytm wallet is basically a wallet where you can keep it in the digital form and use it to buy any goods or services. Great, right? Simple stuff. Now, as per the RBI guidelines, the money deposited by its users in the Paytm wallet is deposited by Paytm in an escrow account. Remember, I told you an escrow account, it is a separate account made only for a specific purpose with a partner bank. Now, escrow account में जो पैसा जाता है उससे interest मिलता है. You get interest on that. They make money on that. So basically, all the money that is deposited by users into their wallet goes into an escrow account, and every day, it's a very small amount, but every day they'll make some kind of interest, right? So and if you keep it for a long period of time, monthly payments agar kar rahe ho, so they make money for the entire month with that. Okay. Now, the escrow account deposit fetches Paytm some certain amount of interest, which is again decided as a contract between them and Paytm and the bank. Okay, but operating a prepaid wallet comes with an expense. Prepaid wallet comes with an expense. Banks and payment gateways charge a fee of 1 to 3%. This we know. Most of the payment gateways charge anywhere between 1 to 3% of all the money deposited for using the services if it's a prepaid wallet. This fee can't be charged to customers, and it will make them choose alternatives like UPI, which is very dangerous for Paytm, and IMPS, which is quite instant money. However, the interest generated through the escrow account deposit is usually more than the expense occurred, which results in profits to the company. Okay, this is quite simple. Now, Paytm had already rolled out its new strategy where it planned to focus more on the digital currency prospects. Why digital currency prospects? Because you will keep your money in the Paytm wallet for a long period of time, and if you keep it for a long period of time, they make some money out of it, right? But prepaid wallet may, they will have to pay some, they have to shell out some fees, 1 to 3% they have to shell out. Now, then let's look at how digital gold works. Sorry. Now, gold is considered in India as one of the safest investments in India, and Paytm has full option to capitalize this, right? By the way, I use this on Google Pay, right? I buy digital gold on Google Pay. Why? So I have this weird funda in life where every time I get a cashback on Google Pay. So if I get 3 rupees cashback, depending on how my bank balance looks at that point, I do into 100 or into 1000 and buy gold. So for example, if I get 3 rupees cashback, I buy 300 rupees worth of gold. Or sometimes if I get about 10 rupees, if I get 10 rupees cashback, I buy 1000 rupees worth of gold, right? Instead of 100, I buy 1000 rupees. So it depends. If it's 3 rupees, I buy 300. But if it's 10, I buy 1000. Sometimes if I have a lot of money in the bank account, if I have 3, I buy 3000. So I don't even know, but I think I've saved up around 30 grand only from cashbacks, right? So I don't even know how that works, but it's very subconscious, and I'm doing this for a very long time. But how do you buy digital gold? There's this company called MMTC PAMP, which is basically you can go buy digital gold without having the cost of storage. So I don't have to go store that digital gold somewhere. And if I want that, if I bought all that grams and I say tomorrow, you know what, give me all my money back, or give me, I can either sell it instantly, or if I say I don't want to sell it, I want that gold in physical form, give it to me, they will courier it to my house. They will literally give me a gold bar of all the grams that I have. So Paytm has partnered with MMTC, which is also what Google Pay has partnered with. And in the future, Paytm wants to have something known as a gold bank account, which will allow users not only to buy gold and store them, but also to use this gold to buy other digital services, other services on Paytm, right? So if I have a gold bank account, where I'm saving for gold, what I have to do right now is I have to remove the gold, put it in liquid cash, and then take that cash and then transfer it to the PayTM wallet, or maybe convert that gold to PayTM wallet, and then from PayTM wallet use it to buy a movie ticket. But imagine I've done so much saving in my digital gold bank account, and I want to go watch some movie. I can just directly cut it from my gold account. That is also possible, is what they're saying. So this is something that they might do in the future. And what they're saying, apart from this, it also plans to connect with a lot of customers with the jewelers, right? So the jewelry industry is also quite big. So later on, they want to connect with all the customers and the jewelers, and they will let the customers get their stored gold converted to finished jewelry, and PayTM will become an affiliate and make some commission out of them. So basically, if I have 10 grams of gold and there is some Kalyan jewelers who said, okay, I can take this 10 gram of gold and give you this beautiful jewelry that you have, and I can just be like, okay, cool, I want this, give me this right now, and then PayTM takes a cut out of that entire transaction. Nothing goes from me, but PayTM takes it from Kalyan jewelers guy. So again, the industry of gold, obviously in India, is always a big industry. It's meant to go up and it'll always go up, but gold is used as a safe haven for a lot of people. Now, we spoke about PayTM Bank, which is basically PayTM gets more customers into its wallet, people use it, a lot of use cases. Now let's look at how that works. Basically, PayTM Bank is a digital bank which can accept deposits and gives interest on the deposits, but can't offer loans to its customers, right? But we saw loans before, but they can't offer loans to customer. Now I'll show you why. This is the problem, or this is the thing about a digital bank, where it can accept deposit and give interest, but it can't give loan. And basically, traditional banks make a lot of money only on loan, but these guys can't do that. That is the problem. Now, it lets customers open zero deposit digital current and savings bank account, and offers 4% interest rate and on savings bank account, and an overdraft facility for your current bank accounts. There is no restrictions on any type of transactions, but any balance deposit over 1 lakh is moved to a fixed deposit with a partner bank, which provides 7% interest for them. Right now, PayTM Bank makes money by depositing the money with some other banks / government deposits, which provides greater interest rate and also gives them good arbitrage. So basically, what PayTM Bank is, Abhi, if I have an online bank, okay, if I have an e-wallet, and everyone in India is depositing money into that in that wallet, do you think me as a smart financial guy, I'm stupid to just keep that money there and be like, oh great, 1 billion rupees is here, or maybe 5,000 crores is in the bank account of PayTM, and I'll be like, very good, interesting. Obviously, no, right? I'm going to use it and start make more money out of it. So obviously, I'm going to, but it has to be safe. I can't invest in something that will make all the money go down. So the safest thing is either buy a government deposit or buy, get interest on some kind of a liquid fund. Lot of opportunities that way. But float pe milta hai. Float, it's called float in the market. Money that is floating, which is not yours, it is someone else, but it is kept in your bank account so that they can use it in the future, but they make nice money out of it. So अगर 1,000 crores 5,000 crores है और उसमें 0.001% या 0.0001% भी मिलता है, so that is great for you, right? Great for the bank as well, because on a daily basis or a monthly basis, they end up making quite a big amount of money. And if you look at their other businesses, which is PayTM Mall, okay, which is basically a simple e-commerce marketplace. Then we have recharge services, which is something that we used quite earlier in the past, where PayTM was used for mobile recharge, prepaid and postpaid, but then slowly it went on to do recharge for literally everything. And again, they take commission from not us, but they take commission from them, right? They take commission from Vodafone, Idea, Jio, etc. Whoever they've tied up with, merchant side pe commission lete. Now, if you look at marketplace, they make money from what? They make money from commission from the sellers, not us again. And if you look at, they have PayTM payment solutions, which is there, which is again milk booths, auto rickshaws, tea stalls, all the normal people. They take some money from there as well. The company charges a commission of 1.99% on every transaction. Okay, I don't know, I think I'm blocking this, but basically it charges 1.99% on every transaction. I should make this, next time I'll keep this in mind, not to put anything on the lower right, because my head quite literally covers it. Now, they have done some acquisitions in the past, but these acquisitions have not generated positive cash flow on anything, right? So they have not generated positive cash flow at all. Some of the acquisitions that they've done are Plus Text, okay, allowed for fast text messaging in any Indian language. Then they have Insider.in, which then became PayTM Insider. So they actually bought Insider.in, made it PayTM Insider. If you look at Jugnu was basically a very interesting app that was there at one point, which became very famous. It was an auto rickshaw aggregator and hyper local delivery platform also. So Jugnu also got acquired by them. Shifu is a consumer behavior prediction platform. Great. Then they have logistics platform called Logi Next and Express Bees. Now Cube 26 is another platform, little and nearby, enables customers and local. Again, you might have read it by now, but this is what they have acquired. Remember, after the money that they take from their, what do you call that, their IPO, they're going to acquire more people, right? So this is something that is very important to look at. Now, if you look at the key highlights, I've done a quick SWOT analysis, right? By the way, amazing research done by my team. This is Debjani's work, incredible work, right? Now, if you look at their strength, they have strong brand awareness across India, obviously with their PayTM Karo campaigns and a lot of other things. They're already a big established player right now. They have really strong investments from SAFE Partners, Elevation Capital, same company, Alibaba, which is Ant Group, Berkshire Hathaway as well. If you look at their weaknesses, their audience in India is less savvy, as majority still consider cash as a primary currency, but we see that is slowly changing. So let's see what will happen. That is number one. Second problem I feel is also that they've diversified a bit too much. Matlab, har jagah everywhere they've gone. And if you realize something, guys, PayTM, I don't know whether you guys have understood it by now, but PayTM has diversified great, but it is still earning a lot of money on interest and commissions, which is barely anything, which is in small percentage. Now, for a company to become a strong company, I need something which is high margin business. I need margins. I don't have margins here. So, will that affect my financials? Because if you tell me, Shashank, to har ek transaction पे 1.99% ले रहा है, or maybe I'm using the escrow account and getting some small percentage out of it, is it beneficial or is it bad? I don't know, right? So we'll have to look at that. And how will UPI come and affect PayTM? I don't know again. So these are some of the weaknesses that are there. If you look at opportunities, yes, PayTM is educating people and accepting cashless transactions, and we have seen that a lot of people in India are now moving towards digital cash. Okay, moving. I don't even remember the last time that I've kept cash in my wallet, to be honest. A lot of people are moving into this. And what PayTM wants to do is offer more banking services and more online payment options. Now, threat was UPI, which is a big threat that came in. Now, growth substantially depends on new merchants to ecosystem. If more merchants come on the ecosystem, more customers come, then obviously there's a chicken and egg problem where I need customers and I need merchants also. Now, this may be affected by business closures, transfer of merchants account to competition. Now, say for example, Google Play has onboarded Google Pay has onboarded a lot of merchants as well. So, are people going there and would they leave PayTM because maybe the charges are more, they can pay less? So, all that comes into the picture right now. Now, banks are offering e-wallets on their savings account. So, banks are entering this game as well. So, will PayTM still survive that? Which is very important, because if you're an investor, a long-term investor, you need to think about all this, right? And then finally, security and privacy of a user is a big concern for PayTM, and failure to improve their technology infrastructure will also create a big issue. Got it? So some of very, very important things. Now look at this very important slide. Peer comparison. Guys, I've been talking non-stop for the last 30 minutes, but this is insane amount of information. Don't worry, bear with me. इसके बाद सिर्फ we will do some price analysis और उसके बाद हो गया, ठीक है? Don't get very angry with me. Now, there are no listed companies in India that engage in a similar business as PayTM. PayTM is the first. Now, if you look at Google Pay, PayTM and PhonePe का comparison, right? UPI payments सब करते हैं, contactless card payments everyone does, third party everyone does. Now, let me show you what Google Play doesn't do, or PhonePe doesn't do, that actually PayTM has. PayTM has the PayTM banking payment bank license. They have that. PhonePe and Google Pay don't have that yet. Right now, e-commerce, travel booking, and event ticketing is their in-house platform. Whereas PhonePe and Google Play are still doing that affiliate model where they have merchants to do that for them. They don't. PayTM has social commerce. These two don't have social commerce. Credit card and business ledger services, they again don't have. Google Pay and PhonePe don't have this. But if you look at the right hand side thing, the one above my head, right? The top 5 UPI apps in Feb, as of Feb 2021, with the number of transactions, just look at this. PhonePe has 42%, 42.55% of all UPI transactions, okay, and Google Pay has 36.11%. If you add both of them, 42 and 36, okay, so how much is that? 78%. Almost, let's assume 79% is only with two players. 79% of the market is with two players. Incredible, right? Now, if you look at PayTM, PayTM Bank has 14%. Great. I think PayTM Payments Bank is at number 3 right now. But if you look at all the others, Amazon Pay is at 1.93. It's not even like made a dent in the system. But PhonePe and Google Pay have taken up almost more than 75% of the market. and PayTM Bank is still at 14%. Now, if it starts doing really well and if the UPI kicks in, they'll take a commission from who? The merchants. They already have so many merchants. So, will that help? But again, Shashank, where is the margin? Everyone's making very less money, or they're playing volume game, right? 1.99% transaction, all that is fine. But मैं कितना spend कर रहा हूँ on marketing, sponsoring BCCI, doing all these ad campaigns, running a team of so many employees. Do you think that's cheap? Definitely not cheap. So Shashank, where does this money come from? Is it sustainable? Is it enough? Because Paytm cannot stop marketing tomorrow. Phone Pay or Google Pay will just take them out. So how does this work? What do the financials look like? We don't know. We'll have to look at this. Now Paytm also launched something known as Paytm First Games, right? Paytm First Games was something that they launched, which also created a slight controversy because they basically did the skill-based real money games on its platform, and it came under this betting, online betting and gambling system in India. So थोड़ा scene हो गया उधर. But let's see. I mean, it's still under the wraps. But again, they're entering into fantasy cricket also now. I mean, basically fantasy, rummy, pool, chess, sab kuch. They're getting into all of that, right? So let's see how that works out. Now, in the next segment, finally, I know it's slightly long, guys, but this is how IPO reviews are. If I rush it, none of us will learn anything and it'll be stupid investors, not educated investors. Now, in the next segment, we will look at the financials of this company, which is very important because I've kept telling you, margin kidhar hai. This is how you think, right? As an investor, where is the margin? And can I see something happening in the future that can prove it to me that either you'll increase your volume or you'll increase your margin and end up making more money in the bottom line so that my return of shareholder comes in, my earnings per share kicks in. So you want to look at that, we need to look at how the financials look. So in the next segment, let's look at the financial overview. So before we look at the financials, let's look at one thing, right? Let's look at what the shareholding cap table is. Why? Because the shareholding pattern is very, very important in a lot of things that we're going to decipher now. Now let's look at this. The first one is the top director shareholders, right? Vijay Shekhar Sharma owns 9.6% in his individual name, in his individual capacity. We have Mark Schwartz, we have Neeraj Arora, all these are there in the board of directors on top. Then we have some key personnel as well, 5 people here, all of them with negligible stake. But the most important thing is the second one below, right? The second one below basically talks about all the shareholders that have more than 1% shareholding, okay? Now, Ant Financials, Ant Fin or Alibaba basically has approximately 29.6%, and then Alibaba e-commerce, another company below, has approximately around 7.2%, right? So this is total. If you look at it, Antfin has a lot of stake in this company. Then if you look at SEF3 Mauritius, now SEF3 Mauritius is SEF Partners, has around 12.1%. Then we have SVF India Holdings, which is at 18.3%. Then we have SAF Partners India 4 Fund, which is the fourth one, which again has around 5%. So if you look at SAF Partners, they have 12.1 plus 5, which is around 17%. Then we have BH International Holdings, which is Berkshire Hathaway's International Holdings of 2.8%. Now, very important is point number 7 under the shareholding pattern is something known as VSS Holding Trust. Do you guys know what is VSS Holding Trust? VSS Holding Trust is nothing but Vijay Shekhar Sharma's own holding trust, which owns 5%. So actually, Vijay Shekhar Sharma owns 9.6 on top plus 5% below. Okay, now understand this. This is very important for a lot of things which I will uncover now soon. So 9.6 plus 5%, total 14% is what Vijay Shekhar Sharma holds. Cool. Now let's look at some financials. Now this is the financials that Paytm has come out with, right? If you look at the Paytm financials with respect to March 2021, FY21 and FY20 ka comparison karte. Right? First, let's look at total revenue. First of all, they've shown total expenses on top. That's a reverse way to look at it. Let's look at total revenue. Now, FY21 total revenue 3186. FY20 total revenue is 3540 crores. So you will see that there is a dip from FY20 to FY21, but we know that because of pandemic, right? Because of COVID, a lot of transactions went to a halt. So obviously they don't make a lot of money on it. So if you look at it again, making you guys understand, 3186 is their total revenue. Out of 3186, their actual revenue, which is revenue from ops or operation, is 2800 crores in this year, and last year they had 3200 crores. Okay, fine, no issues. I'm just showing you the revenue. Now come on top, let's look at the expenses. Now last year their expenses was 6100, whereas the total expenses this year was 4700. मतलब अच्छा खासा ड्रॉप हुआ है, राइट? ऑलमोस्ट 1400 crores का रिडक्शन हुआ है for a revenue loss of only 300 crores almost, or 300 to 400 crores revenue loss के लिए they have reduced their expenses by around 1400 crores. Great. Let's see what they've reduced by 1400 crores. Marketing and promotions, which is basically marketing, has gone down from 1400 crores to 532 crores. Why? Because pandemic didn't have to do a lot of marketing, but also that is something that you can switch off, right? Marketing is something that you can switch on and switch off. ये मंथ ज्यादा करना है, बजट ज्यादा रखना है, ये साल का नहीं करना है तो कम करो, चलेगा, no problem. So 1397 was switched on to 532, which is almost one third, right? So great, उधर थोड़ा savings हो गया, almost what, 1400 minus 500, almost 900 का savings हो गया, 900 crores already saved. Now there's something called payments processing charges, right? So for all these things we see that there's a payment charge that PayTM has to pay as an expense. So for all the services that they do, they have to pay something known as payment processing charge, and that is like a fixed cost that comes with the operations, right? अगर मैं इतना operations कर रहा हूँ तो इतना payment processing charge जाएगा ही. So if you look at it again, if you look at revenue from operations, 2802 crores was this year, and their payment processing charges was 1916, which is more like a fixed cost, right? Like marketing, you can always up and down whenever you want, but 1916 is very linked to your revenue from operations. So 2802 minus 1916 is what they have. Then you have other expenses, which is your rent, employees, etc., etc. 2600 crores again. So totally on a revenue of 3100, they have an expense of 4700 crores, and they have a loss after tax, right? Loss, final loss is 1700 crores loss. Right now, last year, because their marketing expense was so high, it was at 2900 crores. Now, let's assume they don't do marketing at all. Okay, if the steady state, if you assume there is zero marketing, right, they would have made basically 3100 crores in revenue. They would have made, if you assume payment processing charges and other expenses as constant, and if you remove that 500 crores out of their total expense, the total expense would be 4200 crores, right? So basically 900 crores would be somewhere around 900 crores maybe, or 1100 crores, 1200 crores would be their loss after tax. Now to become a profitable company, now what we wanted to become a profitable company. Why? Because you're the shareholder of it. So to become a profitable company, if it becomes profitable, it gives you earnings per share. Currently it's negative earnings per share. It has to reach volume, it has to grow its revenue even more, it has to reduce its expenses even more. Let's look at whether it's possible or not. Now if you deep dive, right, there was something known as other expenses. Okay, if you remember, I'll go back. You saw other expenses, 2962 crores. I wanted to know what is this other expense, right? Chalo, payment processing charges, so almost fixed है. We'll figure that out. Marketing promotions, okay, I understand, very self-explanatory. What is other expenses? किधर जा रहा है पैसा? Right now, payment processing charges 1916 crores. You guys figured out, okay, that you understood. Now, if you look at other expenses, they have put some other expenses which is again almost like the main expenses of their company, right, in other expenses. For example, connectivity and content fees. Okay, connectivity and content fees is the highest of that amount. So if you look at about what 2900 crores that they currently have, 2962 crores of other expenses, around 1800 crores comes only from this, right, which is very expensive. Other expenses is 1819 crores. Then there is something known as contest, ticketing and fast tag expenses. So there is again an expense to do anything with relation to contest, any ticketing or any fast tag, they have to incur an expense. And that is again a big expense of around 681 crores. And if you compare it to last year also they had the same connectivity expense, which is 1500 crores. And if you look at last year, they had contest, ticketing and fast tag expenses of 1200 crores, more double of what it is right now. Another interesting thing to look at, which they have reduced their expenses a lot, just go one step above the contest ticketing. You will see something known as subcontract expenses. Last year, subcontract expenses was 2200 crores, and this year it is 700 crores, gone down by 3 times. How is that possible? Is that, what is it? I don't know what it is, right? Will it come in the future? Just some questions you need to understand. But would you say that contest ticketing, fast tag and connectivity content fees, are they fixed expenses? Should they not come under the processing payments and other expenses? Why are they under other expenses is the main question. Now this is something that is there, right? This is something that we were trying to figure out ki kya hai? I don't understand this so much. Let's figure it out. We try to do an analysis. Now, they have something in their DRHP known as contribution margin to revenue or contribution profit to revenue. Because I wanted to understand what is this connectivity and content fees, what is this contest and ticketing cost, and kitna margin business hai? How much can they make money out of this? So, if you look at this, which is basically your, like in manufacturing companies, if I'm selling a bottle, then what is my main cost of selling this bottle? Like the COGS, right? Cost of goods sold, main cost. What is the margin? Without my employees, nothing. ये bottle बनाने के लिए कितना cost लगेगा? So if you look at this, they have a table which shows 19, 20, 21. And if you look at this, revenue from operations in 2021 is around, it's in millions. So it's around 2,800 crores revenue. Out of that, 1,916 crores is their payment processing charges, which is like fixed charges, so that they lose out from their 2,800 crores. Then promotional cashback and incentive, which is 235 crores. Chalo, that is fine, which is reduced significantly from last year and last to last year. Last year it was 959 crores, reduced significantly because it's a tap, you can always turn it off. Chalo, let's put that also, okay? So 2,800 crores, 1,900 crores का expense आ गया payment processing charge, and then 235 crores का एक और expense आ गया promotional cashback का, that also removed. Now D, A, B, C समझ गया, right? A is your profit, then you keep minusing B minus C. Now we will minus D also. Now D comes your content and connectivity and content fees, which is 1,181 crores, right? This millions keeps confusing me. Yeah. So 181 crores udhar expense aa gaya. Then we saw contest ticketing and FASTag expenses below, which was again 681. That is also an expense for them. Great. Then we have logistics, deployment and collection cost, also another expense. So all in all, sab kuch kaat ke, they're saying now contribution profit has become 362 crores, which is very good. That is what they're showing. The contribution profit has become 362 crores and contribution margin has gone up to 12.9 crores. Now, is that good or is that bad is what they're saying, right? We have gone from negative contribution profit to positive contribution profit. But again, do you guys know, all the smart guys who are watching this, can you see what is the biggest thing that they've changed this contribution profit from 237 minus to 362 plus is only because they've reduced their promotional cashback and incentive from 959 to 237, which is a drastic reduction in their entire thing, right? Now all this is without adding your other costs, which without adding your employees, your salaries, all this is without that. So agar if you add that and you're making 12.9, if you add that, how will you again go into loss, right? That means this is a very low margin business, the way I see it. Remember I kept talking about it in the video that where are the margins, because you do all those operations, you have so many expenses for a low margin business aa gaya. Now to make this a high margin business, they have to get into something like that. Now if you want to look at something else, I will show you something else. Let's go to their so I'll show you in real time, right? This is their, one second, let me just make this full screen. Yeah, so this is their DRHP. Okay, this is their DRHP. One sec, let me push this up. Bear with me, guys. This is good information. Okay, good knowledge. This is the DRHP, and in the DRHP, I'm on the finances. Okay, this is revenue from operations, other income, INR million. Great. So again, 2,800 crores. Okay, with 384 crores as other income. Total income is 3186. Okay, I would just take 2802, but okay, fine, 3186. Now 3186 में से we saw that 1916 had gone. Right, 1916 had gone here. See 1916 which went in processing, which is B. Great. Then you have marketing and promotion, which is 532. Correct. And if you look at marketing and promotion here, it says promotional cashback and incentive is 235, but marketing also comes into some kind of an expense. So let's assume that also. Now look at the employee benefit expense. Employee benefit expense basically talks about the employee expense. That is 1,100 crores ka employee, 1,184 crores ka employee benefit expense. Right. So that is a very big expense. Software, cloud and data center, again I would say is very similar to a fixed cost. That is also 349 crores of more expense. 349 crores of expense that is there. It is pretty much constant over the last 3 years, not much of a change. Depreciation, I won't get into it because it's not great. I mean, I don't look at it too much. Fixed expenses, if you look at finance cost, they don't have any finance cost, they don't have debt, so it's only 34 crores. But if you look at other expenses, again 585 crores, right? So that means on a revenue of 2,800 crores, if I have to open like a calculator and actually check this out for you guys, now revenue is 2082 crores. I won't take other income. I minus all the fixed expenses that I feel, which is 1916 minus karo, nikal do. Then we have 532, which is your marketing expense, nikal do. 1184 minus 1184, which is my employee benefit expense, nikal do. Then 349 is cloud. Yes, this is also important, nikal do. Then we have depreciation, I'll leave it. Finance cost, I'll leave it. Minus 585 again. minus 585. It is 1700 crores ka negative, right? Only on fixed. Okay, this is insane. Now to make it profitable, I have to increase my revenue from operations to a significant amount. I have to increase it a lot for it to be profitable again. So that's what, just showing you how this works, just to make you guys understand. So even though this is at 12% on contribution, but it is very important for us as smart financial guys to look at everything, not just the contribution. Okay, one second, let me just, every time I change this I have to change this back. Yeah, okay, so it is not our job to look at contribution. Is great, fine, whatever it is, because I know you have reduced your promotional cashback, but it is important for us to look at the everything, the whole picture, like the bigger picture, something we need to look at. All this is fine. The business financial overviews, as we saw, expectation of operating expenses are planning to increase as they're planning to hire more people, expand operations and infrastructure and products and services, and more legal and accounting expense. So he's very clearly saying that yes, we are going to increase our operation expense more. Means they have to increase their volume even more and beat all the players to become profitable whenever it is, or get into a high margin business. Pandemic impacted operations negatively, especially with the commerce and the cloud business. Makes sense. GMV declined in FY21 primarily due to disruptions in partner in travel, entertainment, because pandemic happened. All this is fine. Great. I hope you're following me till now. I know it's a long video. I'm sorry for it, but you can always skip and jump skip on the main parts, but this is super important. Now, other interesting facts. Now, this is something that I saw someone on Twitter post, right? And I'm going to give credit because I'm not a guy who takes credit for other people's work. It is, he found some very interesting things in the DRHP, and I'm going to show you what he found, right? I put the source also in the presentation so you guys can watch. So basically, you remember PayTM's PayTM payment bank that was there. So it basically says, if you look at PayTM Payment Bank, first of all, understand the structure. 197 is the parent company. Vijay Shekhar Sharma holds 14.9% on 14% of that company, right? And then we have VSS Trust also. It was 9.6 plus 5 VSS Trust we have. Now it says here that they own 197 owns 49% equity in PayTM Payments Bank, and Vijay Shekhar Sharma, okay, individually holds 51% of the in different instruments such as PayTM Wallet, UPI, NACH, FASTag, fixed deposit, and all other platforms. Now 197 holds 49%. Now me as a shareholder, do I get only 49% of the revenue in my books of accounts, or do I get the remaining 51 also? Question mark. Pata nahi, right? So if PayTM Payments Bank makes 1000 crores tomorrow, will you only put 50% on the books? Will you only say 49% of 490 crores is there in the books of accounts? Me as an investor, I'm losing out on 51. Maybe, I don't know, right? This is something that I don't know. But why is this done? I'll tell you. Okay, why is this done? Why is Vijay Shekhar Sharma holding 51%? I will tell you that also. Now, under the terms of the shareholding agreement with the PayTM, a company also has an option, a call option right, or on any proposed transfer of shares of the PayTM Bank by Vijay Shekhar Sharma, subject to him holding at least 40% of the share capital. So basically, they have a right. Okay, 197 has a right to call some shares of Vijay Shekhar Sharma and buy it from them. Okay, but they still want him to hold at least 40%. So they're trying to take it from Vijay Shekhar Sharma, put it back into 197, where we are the shareholders. We are not shareholders in Vijay Shekhar Sharma, we are shareholders in 197. Now, one more interesting thing, why is this done? Now you'll be like, Shashank, but there's one interesting concept in India where, if you enter the banking space in India under the FDI rules, the Indian company has to hold 51%, or Indian person or Indian company has to have 51% under the FDI route. You cannot come, you can only take 49%, you cannot take more than 49%. But you'll be like, Shashank, but 197 is an Indian company, it's owned by Vijay Shekhar Sharma. But the problem is, what they have done in the DRHP is that they've said that our company is not an Indian company, it is a foreign entity. 197 is a foreign entity. Why is it a foreign entity? Because if you look at these directors of 197, Vijay Shekhar Sharma, yes, India, Kailash, Greater Kailash, Delhi, but Douglas Fagan, United States of America, Munish Verma, United Kingdom, London, Ravi Chandra Adusumali, also in United States of America, Mark Schwartz, also in United States of America. Now, Pallavi Shroff is Greater Kailash, India. Who is Pallavi Shroff? Pallavi Shroff is the lawyer of Vijay Shekhar Sharma, or lawyer of PayTM. And then Ashit Lilani is again in United States, California. So out of 1, 2, 3, 4, 5, 6, 7 people, only 2 are Indians and 5 are not in India. So out of the 7 people that are there, if two are only Indians and seven people, other five people are abroad, they are not classifying this as an Indian company. And again, Vijay Shekhar only holds a small percentage. So basically, if you look at this 197 in India, Vijay Shekhar Sharma only holds 14%. So I would not call it an Indian company. So that is why Vijay Shekhar Sharma, in his individual capacity, is holding 51% in PayTM Bank. Why? Because of the compliance rules. But is that good for us or bad for us? That's the question. Compliance rules to hone do na. Now, one more very interesting thing that he found out on this Twitter, and he's posted it on Twitter. One more interesting thing that he's found out is that it is proposed for our company to provide approximately 4,492 crores. Now, basically, there is an agreement, okay, that 197, okay, with the company that we are investing in, 197 will give 492 crores, okay, to VSS Holdings. VSS Holdings is a company which is 100% owned by Vijay Shekhar Sharma. Okay, so the company will give 492 crores to Vijay Shekhar Sharma, right? Our money maybe that is raised from the funding, I don't know, or maybe from revenues, whatever it is. 492 crores is going into Vijay Shekhar Sharma's trust. The funds, if infused, will be used for the purpose of investing in PIT, which is PayTM Insurtech, okay, which in turn will be further used to invest money in RQBE transaction. What is RQBE transaction? Dekha deta. PayTM Vijay Shekhar Sharma last year was planning to acquire Raheja QBE General Insurance. Okay, so Raheja QBE is a 51% owned by Prism Johnson and 49% by QBE Australia. So PayTM is said to acquire both stakes and would own about 100% in the company. So basically, this is how the structure is. 197 gives 492 crores to VSS Trust, which is owned by Vijay Shekhar Sharma, who will take that money and invest in PIT again because he has to be a majority shareholder in all the banking stuff. So PIT is insurance company, which will further invest that to buy the RQBE transaction that is going to happen as well. So it is inside. All that is fine. Aapko jo karna hai karo, because it is a regulatory thing. I'm not anyone to judge. I'm not saying it's good or bad. I'm just showing this as an information to everyone because 492 crores is going to go in that in that area, right? So understand how it will work with your shareholding. Rest, I will not tell anything. You can figure it out by yourself. So these are some of the key things that we found out, the key things that people found out on the internet, which I'm putting it on this presentation. Now, what PayTM, what the management is saying is that although a loss-making entity right now, although we are a loss-making company, PayTM's next stage of growth will be led by financial services, particularly delivering seamless credit tech products to consumers and merchants with increased financial discipline. PayTM is on a track to break even in 18 months. We expect PayTM to continue to become the largest payment fintech company in India. Now, let me tell you our take. Right now, it is important to note that 50% of the proposed offer is OFS, which does not go into the company, and 8,300 crores, which is the other 50%, would be a primary raise, which is good. Now, Paytm is currently playing in a highly competitive market with new fintech apps, with new neo banking apps. Everyone's coming into this space as well. Banks itself are coming into this space. Paytm is also, Paytm also, as we have observed, is operating at very low margins, right? Around 12% margins. Even if it gets it up to 15 to 20%, their other expenses are massive, insane. So they have to find a way to they have to find a way to get high margin business. Pretty sure he'll figure it out, obviously. The journey, but all that is fine. He has to either hit massive volumes, or with the current volume he has to increase his margin, one of that, right? Or do both at the same time. Great. But another interesting thing to look at is that the journey to become PAT positive for Paytm will take 18 to 24 months, in my opinion, right? Again, this is my take. He said it's going to become 12 to 18 months. My take is 18 to 24 months to become PAT positive, like pure PAT positive. PAT positive is basically profit after tax. Now, assuming for that, they have to retain their current base, increase their user base with innovative market strategies. To increase their user base, they have to spend so much money in marketing again. Kaisa hoga? Pata nahi. The valuation for me seems a bit too high. I felt the same way for Zomato as well. I would personally wait a few quarters, watch the performance, and then definitely enter the stock when I see a clear path to profitability. For all the people who want listing gains, up to you. You can invest, take your money, run away. Again, this is only for a recommendation. This is only for educational purposes. It is not a recommendation. All this is only for education. And I want you guys to give a massive shout out to Devjani, who's a student who's helping me with all this research so that I can come out and put some incredible content for you guys. And if you want to join the team, as long as you're good, I'm okay with that. But again, massive shout out to her, incredible knowledge, right? Incredible stuff. And thanks. This is from Meta Finance. Now let me come back to my main screen. Awesome, guys. Sorry, it was a bit too long. But now, do you understand the entire philosophy of what's happening with PayTM? This was an IPO review. This is my first IPO review. I want your feedback below. If it was too long, I apologize, but I had to show you so much because I don't like doing the traditional thing. हाँ ये business है, हाँ ये वो है, उसके बाद खत्म हो गया, चलो सब कुछ ठीक है. I go deep into it. My team goes deep into it, and we try to find out all the problems that are there, all the solutions that are there. Why what is being done? We are not looking at whether it's a good investment or a bad investment. It's not a recommendation. I'm trying to show you how to look at a DRHP, how to go deep inside and understand and figure out whether why what is happening. Why is Vijay Shekhar Sharma holding 51% in PayTM Bank? Is that money gonna come into our shareholding? I don't know, right? Maybe we'll come to know in the RHP. But all these are questions unanswered yet. But again, this is interesting. At least now you have got a beautiful idea of what PayTM IPO is. So again, I try to do as much as possible from my side. Rest is up to you. Gain your knowledge and do everything by yourself. Again, if you like this video, please like, share, and subscribe. Subscribe because I'm trying to hit this 100k subscription goal in 1 year. So I'm going to try for that. But again, I hope you guys liked it. There was no fluff in this. I was straight to the point. Again, I'll keep doing this. Next, I'm going to come out with MobiQuick IPO review as well. I'm going to come out with Dixon Tech fundamental analysis. Hope you guys like it. Big shout out to everyone and thank you guys for this. Yeah, see you. This is me, Shashank Udupa, signing off. Thank you.